Hello from Cboe Global Markets. I'm Kevin Davitt, and this is Vol 411 for Wednesday, June 26th. We are moving toward the end of the week, which will mark the conclusion of Q2 as well as the start of the G20 summit in Japan. Yesterday, the S&P 500 was lower by just less than 1% as Fed Chair Powell and Bullard seemingly dampened expectations for a 50 basis point cut at their next meeting. So this morning, equities reversed some of the decline on renewed hopes of a U.S.-China trade deal. The SPX was higher by about 15 handles after the open, but has backed off just a bit in the first 2 hours of trade. It's potentially worth noting that the small cap Russell 2000 is back below its 50 and 200-day moving averages yet again. The VIX index was just above 16 at last check. And since we've been comparing, the RVX, which is a constant 30-day expected volatility measure based on RUT options, is right around 19. So that's a 20% premium to VIX, which is right in line with the average RVX premium to VIX over the past 52 weeks. So coming into the end of the quarter, the S&P 500 is higher by 4% in the last 3 months, and the Russell 2000 is essentially unchanged. In early VIX option trading, the July 14-15 put 1x2 traded for a 9-cent debit. Paper bought the 15 puts to sell twice as many 14 puts and paid 9 cents per spread. A trade like that targets a July VIX future expiring on the 17th of next month at or as close to 14 as possible. If held, the risk above 15 at expiration is the premium paid. There is also risk in the event July VIX futures expire below 13.09. One last point, it appears like Robert Mueller will testify in front of Congress on July 17th, which, as mentioned, is expiration for the July VIX futures. That promises to be a closely watched political spectacle. That's Vol 411. Thanks for tuning in.